Okay. Good day to one and all. This is Dr. Sivaraman of inoindices.com. So I'll be giving the Asian session live market analysis and the forecast webinar for the new week, 27th June to 1st of July. So now we are on 27th of June, the week beginning time, between 5 and 5:30 GMT. I'll try to explain to you what is expected to happen in this particular week. And we know that last week there was a turmoil in the market because of the British exit conditions and the voting. So in that process, all over the world, the markets started sliding in a very big way. And you know that we come across the news that the high net worth individuals' valuations has come down and things like that. And people will be worrying whether they have lost so much of money, about 7,000 billion and things like that. But actually speaking, they are holding the positions, but the valuation has come down, and they are the one to increase the valuation later on by manipulating the market. So as a result, it is only a temporary setback for them, and they will get back the status and also the money. So ultimately, the traders, because of the leverage condition, they are not in a position to hold the position for a long time, and they are forced to cut the positions. So ultimately, we need to understand that the players are here to manipulate the market, and they will just make use of all the data and the news release and the events, etc., and try to make big swings. And in the process, they will consistently earn money from that other market, whether the traders lose or gain, but they are always in the process of gaining the money. So that we need to understand. And this being the last week of the month, so we come across the monthly trend reversal time. So the month of June gets over and the new month starts by 1st of July, by Friday. So the players are expected to make whips or moves in the market again in this week in order to hit the derivative market, and also the futures and the options of the derivative market, and also the forward covers in the banks and all other related instruments. They try to handle it in a big way wherever the Forex is involved, foreign currency is involved. That is, giving one currency and taking another currency. The players are here to play around through the door of the arms of the banks. So what is expected in this particular week? They are expected to make a dip, but they made a big drop. In the case of Euro and Yen, we have started recovering. So the dip and the rise is expected to happen in this session, Japanese session on 27th of June. And during the European session, they are expected to make the high level swing and slide it to close, almost close to that of the low. They are expected to take it down just to give the impression that the uncertainty prevails. Then later on, during that of the US session, they are expected to make the swing and rise move and say that there could be an outcome out of this particular confused condition in the market or uncertainty. And you know that there are various interpretations coming out, and there are people who are just voted against, voted in favor of British exit without knowing what will be the implications, etc. They never anticipated the market would collapse in such a big way. So ultimately you come across, it is a mandate of the people, but they are not well educated with regard to the conditions and which could bring in such a volatile move in the market. So ultimately what is more important is that the voting, even though which has happened in favor of British exit, now people are trying to reconsider the voting, and they wanted to find out what could be the appropriate solution. As I explained last week, There are only a few majors now. There are only four majors now in the market: Euro, GBP, USDN, and USD-CHF. There are the four majors. Earlier, in 2000, 2001, you come across, or before that, there were various other currencies like Deutsche Mark, then French francs, all Norwegian kroner, etc. They were all considered as the European currencies and Italian lira. So they were actually bringing in a lot of volatility in the market at that time, and also the liquidity was available. But now everything has become a common currency, euro, and you find that in order to make it tradable as a market, then you find the British pound is separately traded and Swiss franc is separately traded. And if they try to exit, then those currencies will become regional currencies, because there may not be much volume of trade, because it has to be of the international status. Only then it will be used by all over the people from all over the world to take positions, exit, etc. So ultimately, the British as well as the European people might emotionally express something, and later on they could come to an understanding that they will continue to have the association. So we could come across it, and that will be a process. So we'll come across that to happen until such time the players are here to accumulate at the lower level the buy position and start making the volatile moves to earn money from another market. And tomorrow they are expected to make the swing and form up during that of the Japanese session, and then swing and rise during that of the European session, and form up during that of the US session. Then day after tomorrow, that Wednesday, they are expected to make a dip and rise, then continue the rise during that of the European and the US session. The shift in trading zone is in the process, but they have made an extended downward stop again because of the British exit voting, which has come untimely in the market. Otherwise, the players would have taken the market in a very big way to the higher level. From there, they could have made the drop. But unfortunately, before taking it to the higher level, to 1.60 in the case of GBP, from 1.50, they were forced to liquidate and drop the market. Came down to 1.32 last week, and then subsequently they made up a 300 pips drop during the start and started gaining the levels. So anyhow, today they are expected to make the swing and slide during the European session and explain or give that impression to the traders that market is not going to revive. That is how they will give that impression, and then subsequently they are expected to continue to gain the level using some other stories. Then on 30th, they are expected to make the swing and slide during the Japanese session, and then swing and rise during that of the European and the US session. Then first, for the new month, they are expected to make the swing and slide during that of the Japanese session, and then start gaining the levels. And you know that when you come across the non-farm payroll, etc., they are expected to make very good upward move, telling that the British exit is discounted, and now it is a question of US data. That is how they will give that impression to the other market. And next week onwards, we'll come across the trending move, and that will be swing and rise moves in the market till end of July. Now, with regard to the levels in which the currencies are expected to swing, Euro could swing from 1.0950 area to 1.1350, GBP from 1.33 to 1.40. Sudden rise is expected in this particular week. So don't do sell and buy trade. Wait for quick drop, and once they stop cutting the new low for more than 30 minutes, try to take a buy, and you can keep hedge order to limit the risk. And in the event if it is hedged by making a downward move, then you try to book profit in the hedge and keep another hedge order 30 pips below. And once they start gaining the level, trail the hedge order upward until you are able to keep stop at entry. That way you try today. After the drop, don't try to do sell and buy trade. It might look a very easy way of making money, but they will vulnerably trap us. And that is why the players are creating the sentiment now by making such moves in the market. It might appear that market is not having any control, that is why free fall is happening, etc. But the free fall comes because of the type of trade the players do it in the market. They quickly use a specific type of trade and drop the market without selling at the lower level and keep at the lower level the buy orders, and anybody who sells, they will try to absorb it. And that is how they do it. So don't be influenced by such moves in the market, thinking that we can do sell and buy trade. Then in the case of CHF, they are expected to drop to 0.96 and then gain to 0.99, and Canadian dollar is also expected to swing in this range of 1.2850 to 1.3250. Australian dollar, slowly it is expected to gain to 0.76 area. So all in all, you will come across the volatile move is to prevail in the market, but the players are here to gain the levels in all the four majors alternatively, and also in the case of the commodity pairs. So keep that in mind and carefully trade, and don't be under the influence of emotions. Now coming to the initial lows and the highs set for today, and how exactly the market is making the move. Euro formed the low on 0.0984 and the high 1.1075. They are not reached the low or the high. Then in the case of GBP, 33.56 is the low and 34.88 is the high. They are not reached the low or the high, and they are in the middle level now. In the case of yen, 101.52 was the initial low. It came down to 101.47 and come above, and they are likely to gain the level to start with in the case of USD. And at the moment, they have done the contrarian move by dropping Euro, GBP as well as USD yen. And if you think that it is a euphoric condition, then you will not be able to appreciate how they are making the USD gaining move in the case of Euro and GBP, and USD weakening in the case of USD yen. Thereby the yen crosses were dropped phenomenally, and from there they will start gaining the level, and they will accumulate all the lower level cells, technical cells, and then start gaining it one-sided. And you know that yen is a currency which can gain about 200-300 pips in single day, and that is how they are expected to do it in order to trap the traders. So for the week beginning, they have taken it to 101. Probably weekend they will take it to 107 or 108 as a one-sided move. Then, so they made a brief downward stop and started gaining the level. In the case of CHF, 97.07 is the low and 97.59 is the high. They are not reached the low or the high. Then Canadian dollar, 30.14 and 30.87 are the lows and the highs, and they are not reached it. And Australian dollar, 73.87, 74.48, they are not reached the low or the high. So actually, they are focusing on the yen now, and also in the case of Euro and GBP, they have just made the drop and they are trying to accumulate the buy positions in yen crosses. And later on, they will gain the levels in the case of USD yen to start with, and then they could make the slide in the case of Euro and GBP a little bit, or hold and make sideways move during the European session. And during the US session, you will come across USD, they will hold and gain the levels in the case of Euro and GBP. That is how they are expected to make the moves. So carefully trade it and use the hedge order to limit the risk. And that is the only way you will be able to protect your account, and not by simply keeping away from the market. Probably we can say that we are conserving the equity, but at the same time, you are not taking any position to make money from another market. market, because market continues to give trading opportunity, but during the of the uncertain condition, they make very quick moves, and if you are taking the positions at the appropriate time, you will be able to really get a big reward. And probably people think that it is a high risk, high reward trade. It is not like that. If you understand how exactly the players are making the move, it is a high reward trade. Risk you can always limit it by keeping 30 pips hedge order. There is no need to keep a wide stop. Then it might be a high risk, high reward trade. But if you keep a limited 30 pips hedge order in the event, if the hedge is filled and the hedge continues to make profit for more than 30 minutes, you can wait for the market to reverse and continue the trading after keeping stop at entry, or simply close the buy and book profit or maximize the profit on the sell, or you just book profit on the sell side once they stop cutting the new low for more than 30 minutes, and then trail the hedge order profit on the buy side. And if you want to improve your trading, then you can do the averaging after that draw, take another buy position and close both the buy position above their average level. So various trading strategies are available if you use the hedging, and then carefully understand all those things and keep it in mind, so that when it is required, you won't become emotional. You will be able to immediately recollect that type of trade you need to do. Thereby, you will be able to really capture good profit from the other market. How the players are doing it? They are also deploying huge money into the other market, and they cannot afford to lose their shirt, and they cannot become the penniless. So obviously we need to understand they are taking the risk, but they have protective risk, and they do have the trading strategies. Thereby, they are in a position to consistently earn money from the market. So keep in mind that we have to be smarter than that of the player, rather than being afraid of the players. Now, these are all the recommended trades. Probably they are likely to do a downward stop during that of the European session, below that of the low briefly, because it's big beginning time. They do not want anybody to hold the long position and make profit. So once they come down, then immediately you'll find that those who have taken the long position will also liquidate, and also try to take sell position once they cut the low as a breakout trade. Then quickly they will gain the levels, so that the short sellers, after the draw, they will come for short covering to lose the money. So try to keep the limit buy orders near that of the low or slightly lower than that of the low, and keep the exit order 30 pips above and the hedge order 30 pips below. And once the position makes profit, keep stop at entry in the buy position and remove the hedge order, and then trail the exit as well as the stop in their profit making position and maximize the profit. But keep in mind that this being the month end time, they are expected to make sudden upward or the downward move as the knee-jerk reactions. So you have to be very careful while trading during this time, and trade with the hedge. And if the hedging facility is not available, trade with the stop. So don't blindly take the position and take unlimited risk. If you've got any question, you can ask me. I'll answer to those questions. And these are all the market timings here. The Japanese, European, and the US session, and in between the sessions you come across the gap time, and it is a 24-hour cycle. So follow it using the GMT time frame, and each session is divided into early and the mid session, early, mid, and the late session. Early and the late sessions, they handle the majors. Mid sessions, they handle the crosses. They take only two currencies at a given time and try to make them move in order to bring in the volatility in the case of the crosses, and also they have to deploy the margin for taking huge positions in those currencies, and that's why they handle it that way. Now, I'll be on holiday from this midweek till 24th of July. So I will not be in a position to give the webinars, but I will try to give the update in the currency pool, so that will give you an idea how exactly the market is expected to behave during this particular, in subsequent weeks in the month of July. For about 3 weeks, I will not be able to give the Asian Central Live Market Analysis webinar. I'll come back on 25th and try to give the webinars with the forecast as well as the market reading. So hope you appreciate it. And if you got any question, the short-term or the long-term questions, you can ask me. I'll be willing to answer those questions. Along with that of the currencies, the commodities are also expected to gain the levels. Gold, crude, etc. are also expected to gain the level. Probably you could come across a temporary drop in the case of crude, but they will gain the levels back. And keep in mind that all the markets will revive, and they cannot afford to lose the market. They can bring in the volatility in the market, and they will not make the traders disgusted. Once they make the traders disgusted and get away from that other market, it is extremely difficult to get them back into that other market. If the traders are not there, then there is no point players making the moves in the market. Whether it is a currency or a stock or whatever market it is, they require the traders. So they want the institutions, traders, individual traders, etc. to trade, speculate, and try to earn money from that other market. And then that will give the trigger for them to go in for a over trading, over investing, high risk trades, etc. And then the players are there to trap them and earn big money from them. So once in a while you come across the market is known to make such a big drop and the big gain moves. And that's part of the game, because they have to necessarily see that the traders who trade without the stock and also having adequate equity also lose the account. And once in a while they make such moves, and this is British exit is used as an excuse for such phenomenon, nothing more than that. And you will come across and you will continue to see the market floating and continue to see that all the markets recover. And then later on, everybody will forget about the British exit story, because we have seen such stories like the Greece exit, etc. And then after that of the voting, you come across that was discounted. But here, it has been voted against, but still the interpretations come in a different way, and they are expected to revive all the markets in the world. If there is any question, kindly ask me. We have 2 minutes to. I will show the focus slide. Those of you joined late can look into the other focus slide. So keep in mind that initially they will bring in the slide during the European session this week on Monday, today. Then subsequent days they are expected to gain the levels. So once the volume picks up, they will only drop or extended move on the downside only during the Japanese session. In European and US session, they are expected to take the buy position when they make the slide and keep the hedge order to limit the risk. Once the position start making profit, you keep stop at entry and then wait for the rise to happen and try to use the trailing stop and close the position. So if there are questions, I'm willing to answer those questions. The range in which the currencies are expected to swing in this week is given. You can take a note of it. Otherwise, this webinar is being recorded and it will be displayed in FX Street, and you can listen to it from time to time and understand how exactly you can trade. These are all the initial lows and the highs. I noted down around 3:30 GMT, and you can follow it to find out how exactly they breach the initial lows and the initial highs and take up the market. That will be able to help you to identify the type of moves they are doing it in the market, and thereby you'll be able to predict what is going to be the next move. They alternate the extended move with that of the intentional move. The extended move is a quick move. So any quick move is a false move. They have done the extended downward move, extended stopward move in the case of Euro and GBP as well as USD, and during start of the Japanese session started gaining the levels from there. So this is how they just hold low and induce the traders who are carried a long position from that of the last week to develop the margin fear and liquidate the long position, start gaining the levels slowly. And they have got the money power, so they can hold low and accumulate positions. So these are all the recommended trades. During the European session, they are expected to make one brief downward stop, and at that time we can try to take the buy position, and then later on we can book profit during the US session rise. So I'll come back on 25th of July, almost after a month, and continue the Asian session live market analysis webinar. So I take this opportunity to thank FX Street for the facilities provided to present the webinar. I already informed the FX Street authorities to cancel the webinar till 24th and 25th. I'll come back and give the next Asian session live market analysis webinar. Until such time, during the month of July, you'll come across consistent gains in the case of Euro and GBP, and that will be more visible from next week. This week, you come across the month and the month beginning time. So obviously, the volatile move is to prevail, but don't worry about it. Don't develop uncertainty, and you will come across the positive upward shift in trading zone is expected to happen in the month of July. Then you will be able to really appreciate the value of the forecast. So thank you one and all. Wish you all happy trading. See you by 25th of July. Thank you.